Hi guys, I'm Sarah and welcome to your training on starting your business in the best way possible here in the United States. I'm going to be going over things like W-9, classifications, LLC. Do you need one? Do you not? What's a BOI? How do you fill out a 1099 and how to get the best tax benefits and write-offs and deductions for your Enagic business. Like I said, this is for the USA. So if you're not in the USA right now, I do want you to take note of this video though, because it might be something you'll want to come back to in the future as you expand your business globally. Now, I am not a licensed CPA, and this is solely basic information for you to decide what is going to be best for you. And I've acquired this knowledge by physically going through all of these steps personally myself and obtaining things like an LLC and a registered trademark. So let's get started. What is a W-9? Now, you would have filled this out when you first sent off all of your forms to Enagic. And a W-9 is really just a request of taxpayers' information. And they use this to make sure that you are who you say you are to confirm your identity. And the true purpose is so that Enagic can send your commissions and your 1099 at the end of the year. So really important that you want to have that filled out correctly. Now, you might see this form and think it looks familiar. And that's because a W-9 is very similar to a W-4. The difference is that a W-9 is for independent consultants, where a W-4 is for employees. Now, these classifications can really get you kind of turned around on what everything means. However, I'm going to make this really simple. The first one here says individual sole proprietor or single member LLC. Now, when you're filling out your W-9, this is that first section you get, and it's popped up here as a little bit bigger so you can kind of see each of these. Right here is where most of us are going to be. These other classifications, you are really going to already know if you fit into those because you would have had to do a lot of paperwork in order to obtain them. So a C corporation example is Walmart. If you are not a large corporation like Walmart, you're still an individual sole proprietor and or a single member LLC because those are kind of interchangeable words. An S corporation is for a small retail store. And then a partnership is the combination of any businesses that come together, like say Starbucks and Spotify. If you're in Starbucks, you'll hear Spotify music. If you're on Spotify, you'll see a lot of ads for Starbucks on how to get credits for buying more Starbucks. So that's just a collaboration that they've come together. And then the last is trust and estate. And this is when a fiduciary is acting on the behalf of a person or a business. Like I said, most of us who are watching this will definitely fit into the individual sole proprietor or single member LLC. And I'll explain to you why those are all grouped together later on. Now, an LLC stands for Limited Liability Company. And what this does is provides formal business structure and personal liability protection. Simply, it separates your business assets from your personal assets. And this really comes in handy if you're in a business where you may or may not find yourself in a situation where you could be sued. Now, we don't really have that as an issue. It really comes down to, and this is the best example I'd like to give, is if you think about a mowing service and you are a owner of a mowing service and you have registered your business through the state and you've received an LLC. Now, if you are mowing a lawn and a rock flies out and smashes the window of your client, they may want to sue you for damages. Now, when they go to do that, what will happen is they'll sue your business and its finances versus suing yourself personally and your assets. So it just takes those two and separates them. Now, for obtaining an LLC, you would go to your state government website and find out all the information on how much it is to obtain an LLC, to register your business with the state, and how much it would be to keep that maintained. There's usually like a yearly fee that you pay. Now, you do not need to have an LLC to write off your Enagic business expenses and get the benefits of having any sort of deductions. Like I said, it's really just a way to separate your personal assets from your business assets if that is something you need to do as a business. A trademark is, you'll see this at the end of a brand or a product. And really what this is it's saying that they're going through the process of registering that brand through the government. And when you see it with an R and a circle around it, that is once it has gone through the trademarking process and it is now registered within the US government as protecting you from others stealing your brand or stealing your business name. Now, a patent is the protection of an idea. So the same kind of concept with the registered trademark, but instead of it being on your brand or on a product, it is going to be on an actual invention, an idea that you don't want somebody else to use. You may have heard patented within Enagic quite a few times, so that kind of gives you an idea of what that means. Now, this is very specific to if you already have an active LLC, the BOI. This is a new form that the government's asking people to fill out. And what it does is it is a beneficial ownership information form, and it is intended to wean out any fake businesses who are just trying to get tax deductions and write-off benefits without actually having any sort of business at all. So the way to find out whether or not you need to do this is you will go to fincen.gov, only if you have an active LLC at the time of watching this, and you'll go through and it'll let you know what the requirements are to fill that out or not. Now, I do have to say there is no fee to fill this out, but if you need to fill it out and you do not, you could acquire some very large fines. What is a 1099? So this is a tax form that is used to report taxable income, and this will be sent to you straight from Enagic. Now, this is very similar to a W-2, which is sent from an employer to an employee directly from the company. If you are on a payroll, have ever been on a payroll, have ever received a check from your employer, you would know what a W-2 is. Now, a 1099 is for independent contractors, distributors like ourselves, whereas anybody who is on a payroll would receive the W-2. So kind of gives you like a little bit of an idea of what that is. You'll get that in the mail, and it is for all non-payroll workers or entrepreneurs. Tax write-off. This is the exciting part, guys. So first, though, we need to know the difference between gross and net income. Gross is pre-taxed. So that means just pretty much your hours times by your hourly wage, and that will give you your gross pre-taxed amount. Now, what you can actually spend, what you get in a check, what you deposit into your bank, what you have as cash, that is your net income. So what is commonly thought is that when you purchase something and you go to pay the taxes at the end of the year, that whatever the product was that you paid taxes on, you would just get back those taxes when you file your taxes at the end of the year. That is not at all how that works. So what actually happens is an expense that you can deduct from your taxable income, so a business expense, so actually investing into your business, that is a business expense, you can deduct that from your taxable income. So what you would do is you would take the amount of the expense and you would subtract that from your taxable income at the end of the year. So if you have a business purchase of $10,000 and that gets deducted from your gross taxable, that means your pre-taxed, your total full amount of income for that year. Let's say it's $60,000. What would happen is instead of being taxed on the $60,000, you will deduct the $10,000 of the total purchase of your business product or business purchase, and you would deduct that from your taxable income, from your gross income. So that would change your taxable income from 60 to 50. So at the end of the year, instead of paying taxes on $60,000 of your gross income, you will then be paying taxes on $50,000 of your gross income. Like I said, this is all just baseline information for you guys to start your businesses off in the best way possible for you. Everybody may do things different to a hair, but this kind of just gives you the idea of what needs to be happening and what doesn't. Again, I cannot enforce this enough. You do not need an LLC registered through the state in order to benefit from tax write-offs and deductions such as this.